The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials down 273. We get the Nasdaq off 69. S&Ps are off 32. Percentage-wise, what you have out here, folks, is that you have the Dow down 1.1%. You get the Nasdaq down 1%. S&Ps are down 0.8%. Gold contract caught a bid yesterday. Fall through today. We're up 960, 13.31. You get silver up 5 cents, $16.46 an ounce. Notes and bonds are the number, though. That's the bottom line, folks. You get the 10-year note up 26, 120.18. 30-year bond up a point and 21 ticks, 145.05. They both came off the bottom with strength, with wide price spread, all of the above. They want higher price, lower yield. Deviant, no doubt. King dollar down 29 ticks, trading at 89.340. You have the euro at 123.25 to $1 US. Yen is out here trading at a price point of 105.48 to $1 US. Let's go over to our man, Mr. Kevin Hinks, at TD Ameritrade, as we do each and every Tuesday, Wednesday, and Thursday. Now, don't forget, folks, amazing show every trading day right here at TFNN, 11 to 12 Eastern Standard Time. If you want to understand defined risk, options, futures, all of the above. Wrapped it up. Nice hour show each and every day. Check it out, TFNN.com. Hit Tiger TV, or just even at YouTube. Just pull up TFNN, 11 to 12 Eastern Standard Time. Kevin Hinks, what's going on?
Good morning, Mr. O'Brien. Happy Thursday to you.
Happy Thursday to you, man. I'm telling you, it's a beautiful thing.
I'll tell you what a pretty amazing move here in the 30-year and 10-year bond, huh?
Isn't it?
Amazing. Wow.
I'm telling you, man. Those things are just it's so deviant, man. When they came out yesterday and those things just rejected price, it was like, you got to be kidding me. I guess. We have to be prepared for it because these things have been the ever-ready bunny forever, man.
Yep. And I think, what we talked about our customers yesterday, what we mentioned them this morning on our early show was don't get caught up, though, in a short-term trade versus a long-term trend. I think that's what you're seeing here, and you got to be able to identify the difference, Tom. I think this is a kind of a knee-jerk bounce on bonds and then and corresponding yields. I think you got to be careful here to get over invested on the long side in bonds. But I still think though this between 2.8 and 3 is going to be pretty choppy waters here for a little while.
Yeah, well, the intriguing thing in the bond market, it seems that I don't see. I couldn't buy a bond to save my life right now. Do you know what I'm saying? But
exactly.
But in saying that, the aspect of there's so many large trust funds and there's so many large endowments and there's so many large of this that inside their prospectus, guess what? They got to buy bonds. And
there is some fixed demand.
Yeah, that's what it comes down to, right? Which is pretty amazing.
And we bought bonds yesterday during the day on our swim lessons paper money portfolio because we thought something like this might happen. We had bearish positions on in the 30-year bond, and we covered everything yesterday ahead of the number because just this, it's got a history of bouncing after. Remember what we talked about yesterday, Tom? Remember? He came out hawkish his first time. Then he's raising rates. So what did he do? He started with a little dovish, hinting at only 3 rate hikes this year. I think that's what the overall theme was, that this was more or less, in terms of inflation, a very dovish, something leaning more dovish in his Q&A yesterday.
Oh, listen, there's no doubt, because it's like, what was surprising, folks, is that it seemed like the headlines coming across would flat out, inflation's coming in, we're going up. But if you just looked at the market reaction, the dollar went down immediately, bonds went up, and gold took off like beyond belief. So it's like, oh my God, rates aren't going up as high as we seem to be hearing that they are supposed to go up, right? Which is great. That's, hey, listen, we're all on crack, man. The bottom line is that.
Two things I got from his comments yesterday, Tom. Number one, how clear and concise he was.
Yeah.
Right?
Which
I
is
thought
cool.
he hit it out of the park.
Yep.
And the other thing he basically said, in a nutshell, GDP's up, unemployment's down, inflation's flat.
Right.
And that, to me, that is the definition of a great trading market.
Yeah, oh, there's no doubt. And we know that the amount of actual money, folks, that the companies have made, it's the best ever. So It's going to be intriguing here. It just matters as how much our investors going to pay for that amount of money. I mean, that's where I think we're at now. Do you know what I'm saying? It's like, okay. So, hey, what are we going to be talking about today? We got, you know what's so cool, man? There's no doubt. Now we have a two-way market. I mean, strategies are so important, right?
Right, exactly. We're just continue. We've been going over fundamentals this week, right? We've been talking about Vega on Monday, and we talked about yesterday's show. We talked about Theta and Iron Condors. We're just going to continue that the rest of the week here. We've got great shows, all basing on what we do every day, Tom, which is pound fundamentals.
Yeah, there's no doubt. And, you know, folks, if you haven't test-driven the TD platform, real easy to do. You come over to our website at TFNN. You're going to see the banner on the top of the side. Hit the banner. You can bring it up. They'll allow you to trade in paper money. And I really encourage you to do this, and this is why, folks, okay? Not just that it's a great platform, but what you're going to see in this type of market, right, is that platforms, this is when you can find out how great a platform is, how mediocre a platform is, because of the fastness of the quotes and your execution. And I can tell you, I've fired off a lot of trades here this morning already.
Right. And you know what?
And it's there.
And it's not only that, it's also the ease of getting information.
Right.
Right?
Huge.
The ease at your fingertips.
Right.
If you need to know volatility, if you need to know news breaking, if you need to know any of the fundamentals of the stock you're going to trade, Thinkorswim platform.
No, there's no doubt. You know, it's cool listening to you. Sometimes you're even shocked yourself, which is really cool. Do you know what I mean?
Parts of this platform, Tom, that I'm not familiar with. That's why Victor Jones is such a great young man for me to hang out with, because he takes me places on the platform that even I don't go.
Yeah, well, you know, it's just such a professional platform,
right.
And us as retail traders can use it. And so when I hear you, I know you were on the floor for so long, I can just hear it in your voice like, you got to be kidding me. Can you imagine if you ever had that down on the floor?
No,
oh, my God.
No, I can't.
I know. I know.
Look at all the time that I've spent in my career going over volatilities and measuring them and figuring out, you know, okay, if volatility goes up 2 points, what's this option worth? Now it takes you 5 seconds.
I know.
Figure it out.
Pretty amazing.
It's almost frustrating. I'm almost bitter. If I was bitter, I would be, but I'm not.
You're not even close. But listen, it's great hearing the spirit. Just you can pick that up pretty cool, man.
Yeah,
folks,
we're having fun, Tom.
That's exactly.
It doesn't have to be like a wake.
No, not even close.
We can do it and have fun as well.
Totally. Well, listen, you have a great one, a safe one. We look forward to the show 45 minutes from now, and have a great weekend, Kevin.
Thanks for having me on, Tom. You have a great weekend, too.
Thanks so much. Stay right there, folks. Coming right back. We have the Dow Industrials right now down 165. NASDAQ is down 45. S&Ps are off 21. You get a nice bounce going, folks. Coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Right now, we have the Dow Industrials down 191. NASDAQ is off 49. S&Ps are off 24. And you can expect this volatility to continue in spades all day long, folks. Let's go over with let's go to the Nadex platform. We're going to take a look out here into natural gas, right? Natural gas numbers, we are going to be having them coming out at 10:30 this morning. So if we go over and we take a look at the spreads, we'll get into a natural gas and see where we're trading out here. Okay, so let's go into the 11 o'clocks first. Right now we're trading at the 265 inside natural gas. Let me just take a look at this. So if we're looking at the spreads here, the 11 o'clocks lining up at that's interesting. So the bottom ones here are to 250. That's quite a way away from where we actually are right now. It's because natural gas already caught a bid, basically. It's up 0.7%. You've had movement out here today of 264 to 265. There hasn't been that much movement, actually. Let's go take a look at the chart and see where this is. Yeah, that's been some good movement out here. There's no doubt about that. So in the last 30, well, actually, the last 30 minutes, we just went from 264 up to 265. And if we take a look at these, so we're 265. We take a look at a couple of these. So if we take a look at one of them, that we get 265 to 285. Right now, you'd be buying that at 266. You'd be risking $13 on that side. And then on the other side, if we were basically selling one of them. Let me take a look at this right here first. Okay, let's see which way I think this thing is going here. So natural gas. Okay, this is quite a bid, man. You know, you came off the lows out here. 264 we hit. You go top side. You took out the first spike. That was at 4:30 this morning. Yeah, this is going to be intriguing watching this thing shake out. Okay, so let's go back over to the platform. $260. We'll have to trade the other side of it. And the other side of it. Yeah, these ones don't line up. Let me pull this up 1 second. See, we're too far away from where what we're trying to do is try to get into a volatility trade. If we go to the 12 p.m.s, let's see, we have a 12 p.m. 265. Okay, so that's pretty cool. On that side, and then we have one box line. No, that's not going to work either. Yeah, these babies actually just don't line up out here this morning. That's how this is shaking out. Okay, so we've got a little bit too much movement. If we go back over to the, as soon as those numbers do come out, we will get them for you. If we go back over to the S&Ps for a second, so let's go take a look at that E-mini. So E-mini out here, what that has done, you have a nice little range that is setting up here. The low of this range thus far was 2681. That was hit right at the open. Had another test of that down at 2684. That was at 10 o'clock. You get the spike up, which was the last one. Now, this is going to be a cool range, man, because the top of this range right now is 2698. Now, that makes sense. The reason it makes sense, folks, is this, is that when we broke down at 8:30 this morning, the top of that range is 2700. You know, bottom line, you just popped up to 2698. Now, that 2698 actually has a little juice there, meaning volume behind the move. If we go to the NQs, let's look at the NQs. NQs out here, we've got a low N at 67.65. Same type of pop-up. The thing that's intriguing here with the NQs is that also has the volume at 68.24. So that is saying that guess what? We'll test that area again. And that, for the NQs, this is really important. The reason being is that if you get up and over this 68.17 and you have any juice on it, then you can get up there into the 68.42. If we go take a look at the strength versus the weakness inside the Dow Industrials out here, move is on the way down. You have Boeing putting negative 43 points. There we go. 3M 36, Caterpillar 22, United Health 16. Only ones that are positive at this point. You got Intel putting a 1 point into it. Merck putting basically not even a point. In NDX 100, what do we have inside the NDX 100? The strength out here is that you got Walgreens, that's up 1%. Taken away from it, NetEase is down 3.7%. Baidu's off 3.4%. JD.com's down 2.6%. And Comcast is down 2.9%. We look at a couple of the big dogs. You get Facebook. Facebook right now down $1.67. Amazon down 16. Amazon might as well be flat. Google down 18 bucks. So Google is broke Monday swing point, and looks like you're probably going to get the volume too. So these are all small ABC downs. Well, they're not small ABC downs, but Google, the top of that is at what, 1177. That's a big one. It's basically almost $90. Get you to 1,016, and you get 1,048. Now this is pretty cool how this is set up. 1,048 is the low of March 2nd, and we're already into that bar. So the March 2nd is game here. Those are high volume lows. bottom line, that's what it looks like it's going to do. If we go over to the SPY, you'll see how the SPY has set up. SPY's down $2. You broke the low of Monday, which is 268.62. You're going to have the volume. We've already done 18 million. You only need 100 million. The March second low is 264. The high of that low is 269.72. And you can see what has happened. What has happened is that we're already into the high of that low. You know, so that is basically, it brings your probability much higher that that's where you're going. The IWM. So let's look at the IWM, because the IWM yesterday bottom. Yeah, see, this is interesting, man. The IWM doesn't want to give it up, and what that's going to be is that you get a lot of those commodity stocks that are inside the IWM, and that's what's helping us out right now. So the IWM today got down to 155.29. You're at 156.52. And you're going to get a rejection of price here, man. This thing's gonna try to test the 158.26. Gotta love it. Stay right there, folks. We're coming right back. Our phone number is 877-927-6648. We have the Dow down 229, Nasdaq off 54, S&P's down 26. Come right back. Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 274. We get the Nasdaq off 66. S&P's down 30. Let's go over and take a look at the FTSE 100 first in the UK. So FTSE 100, folks, you had broken down last week. Big number, too. This is broken all the February 9th. Swing lows on Friday. What do you have out here today? You got wide price spread. You get volume behind the move once again. And if we take a look at this and pull this back, what you're going to see is that, let's pull it back, actually. Okay, so you're down off 77.92. You're at 69.53. Now, what has happened is that the FTSE got back inside its lower range. So what that's setting up, which is pretty intense, it's setting up a FTSE at about 6,100. That's another 1,000 points down from where we are right now. Big number, man. We go to the DAX in Germany. The DAX in Germany is building cause to blow away its February 9th swing low. We're right at it right now. The 9th swing low is 12,003. The high of that low is 12,296. You are at 12,111. You know, so this is basically bottom line saying the same thing. We're going to get down. We're going to break it. The real question is that once we break it, how does this thing lay out? And the way this lays out is that this also tucked its head back inside its lower range. That lower range, 12,390 would be the range. That's setting up how we broke topside on the DAX. So the DAX, when we broke topside, you were at the bottom was, let's see, 10,004 to 11,004. So 11,480. That's the number that the next number that the DAX is looking at. That's a big heads up, folks. Particularly, it's a big heads up because if we go over and take a look at our SPY, which is sticking out like a sore thumb, is that you have the March 2nd low, and then these babies, though, it's all about the February 9th swing area. The swing area, the high of that swing area is 263.61. The low is laying out here at 252. What I expect we're going to see now, you know, this range is kind of set up for today. I don't expect this market's going to do anything but basically be at lower price at the end of the day. You're going to get an expansion of volume. You're coming into a Friday. It'll build some cause, go sideways a little bit more to build some cause to get into those two lower levels. So that the whole thing is game. So when you're coming into a lower level, and this is what you want to wrap your head around, is that the faster that you come into it, if we come into it fast, the more probability that you can bounce off it. You come into it slow, like if, let's say that we just trade down 30 bucks today, and it stays like that, back and forth. That is slow. That's a slow move in the context of how this market's moving. If we got down 50 S&P points, and then tomorrow you do another 30 or 40, guess what? You'd get a heck of a bounce coming out of there because the amount of energy it takes to do that inside the marketplace is huge. That whole building cause thing is a big number to really get your head wrapped around as to where it is. If we go take a look at these bonds and notes, if we want to put this together, bottom line is that you have the bond market getting into its swing point with volume, and this also looks like it's going to be an ABC up. Let me just see how this shakes out. Yeah, it's an ABC up. So you got 145.11, 141. Ooh, it's a big one too. So you're talking $4. We're talking 146.20. No, yeah, 4. Yeah, okay, so that's still another 1.5 points. You're talking 146.20. You go to 146, yeah, see, that's interesting. So 146.20 is lined up, too, at the sign of strength that we had on February 5th. That February 5th deal is a big deal. Now, watch this. If we put this in, and this is where this is going to get really intriguing, because if we put this, I'm going to put this on a continuous contract, US 1. And what you have when you put this on a continuous contract is 140. Okay, so 148 is the larger range, 146. Okay, it's gonna need more than that. Bottom line, this is how this works. When we came, these bonds, the last time these bonds are out here, we were at let's see, we've gone straight down since December of 2017. Now what you're doing is that we're going up to ice. Okay, so the 146 level gets you into ice. The 148 is the top of it. You get back inside 148. That's going to be saying you're going to 155, which is just it's a mind blower. But guess what? There's, as I said to Kevin Hinks, there's that much money out there that just wants to be safe. And right now we're 2.8 on the 30-year, on the 10-year, which is a nice setup, man. You know, we got to 2.95. Not that the 3% is no magic mark, but it makes a difference. If you go to the TLT, the 20-year ETF bond fund, what you're going to see out here inside the ETF is that that's taking the swing point out today, 120.49, and you're going to have volume easy. We already did 3.6 million. You're coming into 6.7. You know, so this is bottom line. This is also saying that you're going up to that benchmark February 2nd. February 2nd benchmark is 120.26. We put this on a weekly. Now, see, the intriguing thing about this one on the weekly is that this baby never broke down. Never broke its December 26th, 2016 level. That's a monster heads up, folks. Hey. And what that says to me is that this is the beginning of a correction that we might be in for a long period of time. That's because what you have here, see, the first part of the correction had to do with markets were going down, bonds were going down on price, up on yield. And what has happened, you've seen how this thing is twisted around again. And this is the normal correlation inside bond market versus the equity market. When the equity market goes south, bond market goes north. And that's what you see happening here. So it would seem, and I'm putting this together on the speculation part of it, is that, okay, notes and bonds want higher price technically. Fundamentally, it's hard to wrap your head around it, you know. But we've seen that fundamentally for a long period of time. If you stay with technicals inside the bond market, you're 10 times better off, because anyone that has any type of even just great education in the bond market is like, this doesn't even, you know, how does this work? Well, guess what? It works about supply and demand, folks. You know, the Fed can come out and say they want to raise rates as many times as they want. Well, guess what? They can raise rates on bank-to-bank rates. That's the rates that we're talking about here. That's what they raise. When they raise that short-term rate, that is a bank-to-bank rate. That's all that is. You know, the correlation is that, yes, each and every time that happens, our 10-year should go up. But guess what? That's a textbook deal. That's not, where's the money going? Stay right there, folks. Come right back. We have the Dow Industrials right now down 290. Nasdaq's off 77. S&Ps are down 32. Come right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is down 284. You get the Nasdaq off 76. S&Ps are down 32. Let's go take a look at the banking sector, folks. The XLF. XLF out here, that also gap lower, got below the Monday swing low. 28.39, and it looks like you're also going to get the volume there. What we have thus far is this, is that, 1 second, you get, you're coming into 52 million, you're already done 14. And March 2nd, 27.89. That's game. The high is 28.52. So you get game in spades there. The XLE, let's go take a look at the XLE. XLE is going sideways, trading sideways, not much action there. Exxon Mobil, let's go take a look at Exxon. Yeah, same thing. It's going to be intriguing to see how this whole oil deal works out. The reason being is that, let's go, if we take a look at physical oil, what you're going to see, we're at 64.36. At that level, what we're looking at, let's put this. So this came right up to the highs of January, and thus far it hasn't been able to basically take them out. Let me see the volume on this for a second. Yeah, see, okay, so today might be the test. Yesterday, as the prior day, you had juice behind these moves. There was good juice behind the move in both cases. Today, what you have, you got to a higher high. As you got to that higher high, what you also did is that you gave it up on price. So we'll see whether that's going to pull all the way back. It would seem to me that there's been a big disconnect in between the aspect of where physical oil is going and the XLE. The XLE was one of the first ones to come off the high, came off the high with volume, doesn't have a anything basically underneath it, meaning that, there we go. We get action out here, folks. Doesn't have anything underneath it, meaning the aspect of it wants lower price. That's the bottom line. Let's go back over to this S&P for a second. So we're going after right now the lows that were established out here this morning. You're at 2682 and 2681 was the low that was established out here. That number there, yeah, 2681. Right now you're at 2682. So let me see where we're at here. So what time is it? 10:45. You're coming into this. Let me see this for a second. Okay, so you're 5 minutes into this bar. Let me get this a little bit closer. That bar had 87,000 contracts. Right now you're at 40,000. So this thing is set up that you get the break, and you could get the break on volume. It's going to be intriguing watching this whole thing shake out right now, because this is going to be the first big test in the marketplace. So let's go over to the NQs. We take a look at the NQs right now. NQs are coming into it also, and the number we're looking at, the NQs, is 67.66. So you get $10 more down. Right now you're at down 109. And if we go to the Dow and just take a look at the Dow, not that the Dow means much, but you're down 322. You're at 24,354. Yeah, see what's game out here is this low out here, which is 24,211, 217. That's the low of March 2nd. And it's going to be really intriguing that it looks like the way that this market wants to trade right now, that is going to go after that. We have the volume, we have the juice behind this move in order to get that done too, by the way. That's how this is shaking out right now. Let me see. I got to close a couple of these out. 1 second. 11 o'clock. What is that trading at? 81. Some of the higher volume stocks out here. Let's take a look at it. So we got Apple down $1.79. You got JP Morgan down $2.44. That's taking a hit. Nike's down $1.21. You got Visa down $1.80. Caterpillar's down $4.44. Chevron took the hit. So this is intriguing because what has happened, let me go look at Chevron, CVX. Chevron had been stronger than, yeah, it's not that bad. That Chevron had been stronger than the Exxon. It still is. $2 is not the end of the world on a day like today for Chevron. There's no doubt about that. Yeah, this baby doesn't want to stop right now. Okay, so let me look. We just broke, let's see if we broke the S&Ps on volume. We got another ABC down. So your future is at 26.79. And the low's 26.51. This is going to be wild watching this thing shake out. Okay, so put this closer. What I'm doing intraday, I'm looking at this, saying, okay, did we just break down with volume? And it looks like we're dealing with 87,000. You're at 53. It doesn't look to me like you're going to do it. So what happens here is that this would be saying that at this point, it doesn't look like it's going to be an ABC down. Doesn't mean you can get lower. But you want to be all over this. The reason being is that if you're trading this intraday, if you reject the 26.81, then your other range up there is where we went up to ICE on the other side. So it's pretty cool, which is 26.98. That's a big number, man. I suspect first time down they'll flush it a little bit more than normal, though. That's what normally happens. If we take a look at percentages out here, you got the Dow down 1.4, the Nasdaq down 1.2, S&P's down 9/10. See, the danger right here, looking at this market, is that this market percentage-wise is not down a huge amount, folks, okay? If we go over to Europe, let me look at Europe again for a second. Notice it wants the heads up. Europe, we're going down a lot lower. Europe, the FTSE's down 1.5% right now. The CAT's down almost 2. The DAX is down 1 point. They're both down 1.9. See ya. This is this is problematic for our markets. Well, we know, my take is we're going to go after the February 6th low anyway. But when you have European markets that are down like this, guess what? Hold on for the ride, man, because this thing is doing the basically building cause to get down to that next level. Now, it would be pretty intense when you're looking at the Dow at 350. 350 Dow is still only 1.4%. So if you just do the correlation of just the DAX or the FTSE, you know, you're talking about 1.9%. And what they are doing is that they basically they're coming into their close. So you can see what's happening. As those markets coming into their close, they're selling it off, and they're selling off pretty good into that close. Stay right there, folks. Come right back. Dow Industrials right now down 370. Nasdaq's off 96. S&Ps are down 40. Come right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Welcome back, folks. We have the Dow Industrials right now down 365. You get the Nasdaq off 99. S&Ps are off 40. And the composite, we go take a look at that composite. What you have with the composite right now, you broke that Monday low decisively. That's 72.85. You're at 72.45. The high of the March low, folks, is 72.67. We're in it. that brings your probability much higher that that's right where we're going. And guess what, folks? There's plenty of equities out here that you can look at that are already down into the challenging the top of the February 9th level. So bottom line is that, number one, March 2nd is a game in a huge way, but what is wide open now is the aspect of this February swing area. Because what you do have is this. See, the time-wise, you're set up also. You're set up right. And what I mean specifically is that you're already done option expiration. You have you come into a Friday, you get the weekend, you can build calls all next week in order to get the lower price. Because the bottom line is that we don't have another option expiration for like 3 weeks. So most of the trades and the bets going whether bullish or bearish are already laid out. And now it's just going to be basically where is the momentum? And the momentum right now is downtown. We haven't seen momentum downtown in a long period of time. There's no doubt about that. But what you do get is that you'll get from sector to sector to sector. One sector starts going south, they'll basically sell another sector just because it hasn't gone south yet. That brings it south, and that's just kind of how that momentum works when you go across markets. You stay right there, folks. We've got swim lessons coming up next. They're going to be growling and prowling with you. Then, of course, I'm Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back, and Andy Hecht. Have a great one, folks. Have a safe one. Dow's down 372. Nasdaq's off 105. S&Ps are down 42. Stay right there. Coming right up.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.